Welcome to Silver Price Watch. Stay till the end and take notes as this might help you make sense of the situation. I'm giving you 3 scenario ranges for this week and breaking down key indicators, and we will discuss the most likely scenario at the end. Please remember this is informational only. This is not financial advice. As we head into Wednesday, February 18th, silver is around $75. Scenario 1. Bull case. If Fed minutes lean dovish and Friday's PCE inflation and GDP don't come in hot, the USD can soften and silver can rebound hard in thin liquidity. My bull range for this week is $80 to $88. Here's what confirms it. 1. Price reclaims $76 to $78 and holds. 2. USD stays soft after Fed minutes and Friday's data. 3. No fresh forced selling headlines and risk sentiment stabilizes. Scenario 2. Base case. Base case is ugly chop. Big intraday swings but no clean trend because Asia liquidity is thin into the Lunar New Year reopen and we have major macro catalysts. My base range for this week is $70 to $80. Key indicators to watch. 1. Dips get bought in the $70 to $73 zone. 2. Rallies fail near $79 to $80. 3. Fed minutes and Friday data come in mixed and we stay headline driven. Scenario 3. Bear case. If Fed minutes read hawkish or Friday's PCE/GDP runs hot, yields in the USD can jump and silver can get hit again, especially with leverage already constrained. My bear range for this week is $64 to $72. Key indicators to watch. 1. Price loses $72 to $73 and can't reclaim it. 2. USD firms hard into or after Friday's data. 3. You see fresh liquidation headlines and forced selling language return. And here's what indicates which path we're on. Driver 1 is margin mechanics. CME hiked COMEX silver margins to 18%, and higher margin requirements can force some traders to reduce positions. Deleveraging can trigger forced selling or forced buying. Result: higher volatility and sharper intraday swings. Translation: this week can move hard even without new headlines. Driver 2 is macro timing. Fed minutes drop Wednesday, February 18th at 2 p.m. Eastern Time, and Friday, February 20th is a doubleheader with PCE inflation and GDP at 8:30 a.m. Eastern Time. Silver reacts hard because these releases move rates and the USD. Hot inflation or strong growth, USD up, silver often down. Cooler inflation or weaker growth, USD down, silver can bounce. Driver 3 is thin liquidity. Several major Asian markets are closed for Lunar New Year, and that can exaggerate moves, especially when volatility is already high. Early week can print bigger swings on less volume. Driver 4 is the COMEX shortage narrative. There's a lot of speculation about manipulation, but here's the clean way to frame it. COMEX registered silver is under 100 million ounces, which can increase stress and volatility around delivery talk. But low registered alone is not proof of manipulation. The practical takeaway is to watch registered changes, spreads, and any unusual dislocations between spot and futures. This week is basically a fight between $70 to $73 as support and $79 to $80 as recovery. Above $80, the bull bounce has room. Below $72, the bear flush risk jumps fast. Here's the weekly map again. Bull, $80 to $88. Base, $70 to $80. Bear, $64 to $72. 3 things to watch this week. 1. Wednesday Fed minutes reaction. 2. Friday PCE and GDP reaction, because that can decide the weekly close. 3. Margin and liquidity headlines, plus any COMEX registered inventory chatter that spikes volatility. Now, the most likely scenario for this week based on the real-world setup. Our call is the base case range, roughly $70 to $80, but with elevated bear risk around Wednesday and Friday. Here's why. 1. Margin pressure usually creates messy two-way trading, not a clean trend. 2. Thin liquidity can exaggerate downside wicks even when the market is trying to stabilize. 3. Upside can get capped quickly if the USD stays firm into hot inflation or growth data, so a smooth bull run needs a clear catalyst. Probability weight, not a guarantee. Base approximately 55%. Bear approximately 35% with risk clustered around the macro drops. Bull approximately 10%, and it needs clear USD downside and calmer rates. Please remember to hit that subscribe and stay tuned for the coming week's updates. As always, this is not financial or investment advice.